So you're thinking about launching a business?
Uh-huh.
That's awesome.
Yeah.
Congratulations.
It's huge.
But before you go full speed ahead,
Right.
we need to talk about something that might not be as exciting as
Yeah.
picking out a logo
Uh-huh.
or designing your website,
Yeah.
and that is taxes.
Oh, yeah, taxes.
Wow, I know.
Not the most glamorous topic.
Not the most fun thing to think about when you're all fired up to launch your dream business.
For sure.
But trust me,
Uh-huh.
getting a handle on this stuff up front can save you so much stress and
Makes
could
it
even
real.
help you boost those profits down the line.
Right.
And that's what we're all about here, right?
That's it?
So we've got your notes.
Okay.
We've got that awesome PDF,
Mm-hmm.
starting a business from a tax standpoint.
Yeah, good stuff in there.
And we're going to deep dive into all the need-to-know info to
Yeah.
help you launch with confidence.
That's right. What's fascinating here is that a lot of new business owners just don't realize how much taxes impact their decisions right from the get-go.
Yeah.
It's not just about, filing once a year.
Right.
It's about setting up your business
Mm-hmm.
in a way that minimizes
Yeah.
your tax liability from day one.
Okay.
Think of it like
I like that.
building a house.
Okay.
You need that solid foundation
Yeah.
to support everything else you're going to build on top of it.
Okay. Love that analogy.
Mm-hmm.
So where do we even begin with this foundation?
Well, the first thing we got to tackle is choosing the right business structure.
Okay.
This PDF
Mm-hmm.
breaks down into 5 main
Yeah.
options.
Okay.
You got sole proprietorship,
No. Good.
partnership,
Okay.
LLC,
Got it.
S Corp, and C Corp.
Okay, wait, hold on. Before we get into the specifics of each one,
Yeah.
can you give me like the quick explain it like on 5 overview of like
Yeah.
why the structure even matters?
Sure. Imagine you're choosing a car.
Okay.
You wouldn't pick a sports car if you need to haul a bunch of cargo, right? Business structures are similar.
Okay.
Each one is designed for different needs,
Yeah.
and they have different tax implications.
Mm.
Choosing the wrong one
Yeah.
can lead to you paying way more taxes than you need to.
I know.
And it can even put your personal assets at risk
Oh, wow.
if your business runs into trouble.
Okay, that makes sense.
Yeah.
So it's not just about picking the easiest option.
Yeah.
It's about finding the structure that really aligns with my business goals,
Yeah.
but also protects me from
Yeah.
potential risks down the road.
Exactly.
No.
Now let's unpack those 5 structures.
All right, let's do it.
All right.
First up, we have the sole proprietorship.
Uh-huh.
And I feel like this is the one that a lot of like freelancers and solopreneurs
This is the default for sure.
kind of default to.
It's simple.
What are the key things to know about this structure
Okay.
from a tax standpoint?
Well, with the sole proprietorship, you and your business are basically one entity
Okay.
in the eyes of the IRS. So all of the business income and expenses
Yeah.
go right onto your personal tax return.
So no separate tax return for the business itself.
Ooh, okay.
You'll use a form called Schedule C
So-
to report everything.
Got it.
This is definitely the simplest structure to set up,
Okay.
but there's a catch.
Oh.
You are personally liable for all the business debts.
Oh, so if things go south, my personal assets are on the line.
That's right.
Okay,
Yes.
something to think about.
It's a trade-off
Yeah.
for the simplicity.
Got it.
Yeah.
Okay, what about partnerships?
Okay.
How does the tax situation change
Right.
when there's more than one person involved?
Partnerships are similar to sole proprietorships
Okay.
in that the business itself
Mm-hmm.
doesn't file a separate tax return.
Okay.
Instead, you'll file what's called an informational return.
Okay.
And each partner reports their share of the income and expenses
Got it.
on their own personal tax returns.
So it's kind of like dividing up the tax pie.
Exactly. Based on how the partnership is structured.
It's important to have a really clear partnership agreement
Okay.
that outlines how the profits and losses are shared,
Yeah,
because that directly affects each partner's tax liability.
got it. Okay, let's move on to LLCs.
Okay.
I know this is a structure that a lot of small businesses choose.
Very popular, yeah.
What makes it so popular from a tax perspective?
LLCs offer a lot more flexibility.
Okay.
They're considered what's called pass-through entities by default,
Okay.
meaning that
Yeah.
the income and expenses flow through to the
Mhm.
owner's personal tax return.
Okay.
But here's the cool part.
Okay.
An LLC can choose to be taxed as an S Corp or a C Corp instead.
Wait, hold on.
Mm-hmm.
Pass-through entity?
Yes.
S-Corp.
S Corp.
Yeah, we got a lot of terms flying
Yeah, a
around.
little lost in the jargon.
Okay, let's break it down.
Yeah, please.
All right, so a pass-through entity simply means that the business itself doesn't pay taxes.
Okay.
The profits pass through to the owners.
And they report them on their individual tax returns.
Got it.
Now, S Corp and C Corp
Mm-hmm.
are separate tax classifications
Okay.
with their own sets of rules and advantages.
So an LLC can basically choose its own adventure
Exactly.
when it comes to taxes.
You got it.
But choosing the right adventure, I guess, depends on my
Exactly.
specific circumstances and my goals.
Exactly.
All right, my curiosity is piqued.
Okay.
Let's dive into those S Corp and C Corp.
All right.
What makes them different?
Okay.
Okay, why would an LLC choose one over the other?
Think of it like this.
Okay.
An S Corp is like a souped-up version
Okay.
of a sole proprietorship or partnership.
Okay.
It still offers that pass-through taxation,
Mm-hmm.
but it gives you more control over how you pay yourself.
Okay.
And it can potentially lower your self-employment tax burden.
Ooh, lower taxes. Always a good thing.
Always a good thing.
What's the catch?
Well, there are some eligibility requirements
Okay.
and a bit more paperwork involved.
Sure.
But if you're actively involved in your LLC
Mm-hmm.
and you want to try to minimize those self-employment taxes,
Yeah.
it's definitely worth considering.
Okay, so what about C Corp?
Right.
When would this structure make sense?
C Corp are like the heavy hitters of the business world.
Okay.
They're taxed as separate entities,
Okay.
meaning the corporation files its own tax return
Mm-hmm.
and pays taxes on its profits.
So the business is literally its own taxpayer.
It is.
That seems intense.
It can be.
Yeah.
And this is where that dreaded double taxation comes in.
Oh.
If the corporation distributes profits to shareholders as dividends,
Okay.
those dividends are also taxed
Oh.
on the individual level.
Double taxation.
Yeah,
Ouch.
not fun.
Why would anyone choose a C Corp if it means paying taxes twice?
That's a good question.
Yeah.
C Corp are generally better suited for larger companies
Okay.
or companies that are looking to go public
Hmm.
or attract significant investment. They offer some advantages in terms of raising capital
Okay.
and limiting liability for shareholders.
So it's a trade-off.
It is.
More complexity,
Uh-huh.
potential for double taxation,
Yep,
but also more potential for growth and protection.
exactly.
Okay.
The key is to really weigh the pros and cons carefully
Yeah.
and choose the structure that aligns with your long-term vision
Mm-hmm.
for your business.
Makes sense.
And speaking of long-term vision,
Okay.
let's move beyond just choosing a structure
Yeah.
and talk about the importance of proactive tax planning.
Okay.
Remember that PDF we mentioned?
Yeah.
It highlights a fascinating statistic.
Oh, I love statistics.
Businesses with organized records are 70% less likely to face an audit.
Whoa. 70%?
70%.
That's huge.
It is.
So I guess that shoebox full of receipts
Yeah.
isn't going to cut it.
Probably not the best strategy.
Definitely not. But beyond just record keeping,
Yeah.
the PDF really stresses the importance of strategically planning throughout the year, not just absolutely reacting when tax season rolls around.
It's about being proactive.
Okay, I'm intrigued.
Yeah.
What does strategic tax planning even look like for a
Okay.
new business owner?
Well, it starts with really understanding your income and expenses,
Okay.
but it also involves things like timing your purchases,
Okay.
structuring your investments,
Mm-hmm.
and even deciding when to donate to charity.
Oh, interesting.
All of these actions can have tax implications.
So it's about being mindful of the tax consequences of every decision,
Exactly.
not just reacting when the tax deadline is looming.
Right. You're thinking ahead.
Yeah.
You're being proactive.
Got it.
And by doing that, you can potentially minimize your tax liability
Mm.
and free up more resources
Yeah.
to invest back into your business.
Okay. Love that.
Yeah. Yeah, it's like playing chess,
Right.
thinking a few moves ahead
Yeah.
to anticipate those tax implications.
Oh, okay. I'm starting to see how this can get pretty complex.
Yeah, it can be a lot.
But the good news is we don't have to figure this all out on our own right.
Absolutely not.
The PDF mentions some helpful resources
Yes.
for new business owners.
It highlights some of the usual suspects,
Okay.
like the IRS website.
Oh, the IRS.
Yeah. And the Small Business Administration website,
Got it.
the SBA.
Really? I always assumed the IRS website was just a
Yeah.
black hole of
Yeah.
tax forms and legalese.
It can be a little intimidating.
Yeah. Yeah.
But they've actually made a real effort
Okay.
to create resources that are actually helpful
Okay.
for people starting out.
That's good.
You can find info on choosing a business structure,
Mm-hmm.
understanding your tax obligations,
Okay.
and even some interactive tools to help you estimate your taxes.
Okay. That's way more user-friendly than I imagined.
It's gotten better.
What about the SBA?
The SBA is fantastic.
Yeah.
For small business owners in general,
Okay.
they offer guidance on everything.
Oh, wow.
From writing a business plan to securing funding,
Mhm.
navigating the legal and financial aspects of running a business.
That's awesome.
And that includes taxes, of course.
So it's like a one-stop shop. For all things small business.
You got it.
I love that.
They have articles, they have workshops,
Okay.
they even have mentors
Oh, wow.
who can help you understand your tax obligations and make smart decisions.
That's great.
Yeah, so you don't have to go it alone.
It's reassuring that there's actual support out there
For sure.
for new business owners.
Absolutely.
Yeah.
And don't underestimate the value of connecting with other entrepreneurs too.
Oh, yeah.
Networking with people who have already been through it can be invaluable.
You know, that's so true. Sometimes it's just helpful to talk to someone who's been there, done that.
Yeah.
They can offer advice, point you in the right direction,
It's
to resources.
And they can share some of their war stories about their tax experiences,
That's exactly.
which can be really helpful.
Learning from others' mistakes.
Yes.
Always a good strategy.
Precisely.
Oh.
Speaking of learning,
Okay.
let's dive back into the details of those business structures.
Okay.
The PDF goes into quite a bit of depth
Okay.
about the pros and cons of each one.
Awesome.
Yeah.
We talked about sole proprietorships and partnerships earlier.
Right.
You mentioned that LLCs are more flexible, but I'm still a bit fuzzy on the details of those S Corp and C Corp.
Yeah, those can be a little tricky.
Yeah, can we revisit those?
Of course. So remember, with an LLC,
Mm-hmm.
you have the option of being taxed as a pass-through entity by default.
Right.
Or you can choose to be taxed as an S Corp or a C Corp.
Right. The choose your own adventure.
Exact aspect of LLCs.
You got it. Now, an S Corp is kind of like a hybrid between a pass-through entity and a corporation.
Got it.
You still get the benefit of the income and expenses flowing through to your personal tax return.
But it offers some advantages when it comes to self-employment taxes.
Okay, self-employment tax. I thought those were only for sole proprietors and partners.
That's a common misconception.
Whoa, okay.
If you're an LLC owner who is actively involved in the business, you're considered self-employed.
Okay.
And you have to pay those taxes.
Got it.
But with an S Corp, you can split your income into salary and distributions.
Okay.
And you only pay self-employment taxes on the salary portion.
Oh, interesting.
Not the distributions.
Oh, okay. So it's a way to potentially lower my overall tax burden.
Precisely.
Okay.
Now, C Corp, a different story.
Okay.
They're taxed as separate entities.
Right.
Which means the business itself files a corporate tax return and pays taxes on its profits.
Right. The business becomes its own taxpayer.
Exactly.
And then there's that double taxation thing, which doesn't sound very appealing.
It's not the most fun part. Double taxation means that if the corporation distributes profits to shareholders as dividends, those dividends are taxed again.
Oh, no.
At the individual level.
So you're essentially paying taxes twice.
Essentially.
Yes. On the same income.
Yeah, it can feel that way.
Why would anyone opt for that?
Good question. C Corp offers some advantages for larger businesses, especially those that are looking to raise capital through the sale of stock, or those that are seeking to limit personal liability for shareholders. It's a more complex structure, but it can make sense in certain situations.
So like we said before, it really depends on your individual circumstances and goals?
It's not one size fits all.
Not at all.
Choosing the right structure is a crucial decision.
Yeah.
You shouldn't take it lightly.
No.
It's worth consulting with a tax professional.
Okay.
Or an attorney.
Good advice.
To get personalized advice. Now, beyond the initial setup, remember that tax planning is an ongoing process. It's not just about filing your taxes once a year. It's about making informed decisions throughout the year that can help you minimize your tax liability.
Okay, so we're talking about being proactive.
Proactive.
Not just reactive.
Yes.
Can you give me some specific examples of what that looks like?
Sure. Imagine you're planning to invest in some new equipment. For your business. Strategically timing that purchase could allow you to take advantage of certain tax deductions or credits.
Oh, interesting.
Or let's say you're thinking about making a charitable donation. Timing that donation strategically could also have some tax benefits.
Okay, so it's like a puzzle figuring out how all these pieces fit together.
It is.
To minimize my overall burden.
That's a great way to put it.
Yeah.
And just like with any puzzle,
yeah,
it's helpful to have some guidance along the way.
Right, like those resources we talked about earlier.
Exactly.
Yeah.
Don't be afraid to tap into those resources. So whether it's the IRS website, the SBA, or even connecting with other experienced entrepreneurs.
Yeah, great advice.
They can offer valuable insights and help you navigate the complexities of the tax system.
Okay, I'm starting to feel a lot more confident about tackling this whole tax thing.
Good.
But I have to admit, there's one topic that's still kind of bugging me.
Oh, what's that?
That whole use tax thing.
Oh, use tax.
Yeah, can we circle back to that?
Of course. It's a concept that trips up a lot of people.
Okay.
So you're not alone.
All right.
Remember how we talked about sales tax?
Yes.
Well, use tax is kind of like its lesser-known cousin.
Okay.
It's essentially a tax you owe on items you purchased for your business that weren't taxed at the point of sale.
Okay.
Usually because you bought them online.
Okay.
Or from a vendor in another state.
Yes. So if I buy like a laptop online from a vendor in another state and they don't charge me sales tax, I might still owe taxes in my own state.
You might?
That seems so counterintuitive.
It does.
Why wouldn't I just buy everything online then?
I see where you're going with this.
Yeah.
It's a clever thought.
Yeah.
But unfortunately, it's not that simple.
Okay.
States have gotten wise to this tactic, and many of them have implemented use tax laws to ensure they're still collecting their fair share of revenue.
Okay, so it's not a foolproof loophole.
Not quite.
Darn. I'm still a little bit confused, though.
Right.
How do I even know if I owe use tax? And how do I calculate it?
It can be a bit tricky.
Yeah.
But there are resources available to help you navigate it.
Okay.
Your state's Department of Revenue website should have information on use tax rates and how to file and pay.
Got it.
And some accounting software programs can also help you track your use tax obligations.
Okay, so it's not something I can just ignore.
It's best not to ignore it.
Yeah.
And hope it goes away.
It'll probably catch up with you eventually.
Yeah, I need to be proactive.
You do.
And figure out if it applies to my business.
Exactly. And that brings us back to the overarching theme of this deep dive, the importance of being proactive when it comes to your business taxes.
Yeah.
By staying informed, planning ahead, and seeking guidance when needed, you can set yourself up for success and avoid those nasty surprises down the road.
I love that. Okay, I'm feeling much more equipped to navigate this whole tax landscape now.
Excellent.
But before we wrap up,
I
want to make sure we touch on all the different types of taxes that businesses might encounter.
Okay.
We talked about income tax, sales tax, use tax.
Right.
But what about things like payroll tax and property tax?
You're right. There are a few more pieces
to this tax puzzle.
Okay.
Let's start with payroll tax.
Okay.
This one applies if you plan to hire employees.
Okay. So if I'm a solopreneur flying solo for now, I can skip this part.
For now, yes.
Okay.
But it's good to have it on your radar.
Got it.
For the future.
Okay.
Payroll tax can feel like a whole different language.
Oh, no.
But the basic idea is that as an employer, you're responsible for withholding and remitting certain taxes on behalf of your employees.
So it's not just about paying my employees their wages.
It's not that simple.
I also have to handle a bunch of tax-related stuff.
You do.
Okay.
You'll need to deduct taxes from their paychecks and send them to the government.
Okay.
It's crucial to be accurate with these calculations and payments because mistakes can be costly.
Yikes. Okay.
Both for you and your employees.
Noted accuracy is key when it comes to payroll taxes.
Absolutely.
What about property tax?
Property tax, does that apply to all businesses?
Property tax typically applies if you own or lease property for your business, like an office space or a warehouse.
Got it.
The rates and calculations vary depending on your location and the assessed value of the property.
So if I'm running my business from my home office, I don't need to worry about property tax.
You might not have to pay separate property taxes for your home office, but you might be able to deduct a portion of your home expenses on your tax return.
Okay.
It's worth exploring the rules for home office deductions with a tax professional.
Good to know.
Yeah.
Okay, so we've covered a lot of ground here.
We have.
Income tax, sales tax, use tax, payroll tax, property tax.
It's a lot.
It's a lot to keep straight.
It is.
Any final words of wisdom?
Don't panic.
Okay.
It's understandable to feel overwhelmed.
Yeah.
But remember, you don't have to be a tax expert to run a successful business. Okay, good.
The key is to be proactive seek guidance when needed, and take advantage of the resources that are available to you.
I'm feeling much more empowered now.
That's what we like to hear.
To take on this tax challenge.
Remember, understanding your tax obligations isn't just about compliance.
Right.
It's about setting your business up for success.
Right from the start.
From the start.
Love that.
Yeah.
Yeah, it really feels like we've uncovered the hidden tax secrets that nobody tells you about when you're starting a business.
Right. It's not always the most talked about topic.
Definitely not. But it's so important.
It is.
Knowledge is power.
Absolutely. Yeah. Especially when it comes to taxes.
Especially when it comes to taxes.
Especially when it comes to taxes.
By understanding the rules of the game, you can make those strategic decisions that benefit your bottom line.
Okay, so we've covered a ton of ground today.
We have.
Choosing the right business structure, understanding different types of taxes.
Finding those helpful resources. But remember,
yes,
this is just the beginning on your tax journey.
The start of an exciting adventure.
That's a little daunting.
It can be.
But also exciting. It means there's always more to learn.
Absolutely.
And new challenges to tackle.
And the tax laws are always changing.
How great.
So it's an ongoing process.
All right, so as we wrap up this deep dive, what are some key takeaways our listeners should keep in mind as they embark on their entrepreneurial adventures?
I think the biggest takeaway is that understanding your tax obligations isn't just about compliance. It's about setting your business up for success from the start.
From day one.
By being proactive, planning ahead, and making informed decisions. You can minimize that tax burden and free up more resources to invest in your business growth.
Just like we said earlier, taxes aren't just something you deal with once a year. They're an integral part of running a successful business.
Exactly. And remember, knowledge is power. The more you understand about taxes, the better equipped you'll be to make smart decisions for your business.
This has been a truly insightful deep dive into the world of business taxes.
Lots of good info.
I feel like I've gained a whole new level of understanding.
That's fantastic to hear. And remember, you're not alone on this journey. There are resources and experts available to help you every step of the way.
Okay, that's good to know.
Yeah.
Well, thanks for joining us today.
It's been my pleasure.
On this tax adventure.
Yes.
I hope you found it helpful and maybe even a little bit empowering.
Absolutely. Congratulations again on taking this exciting step.
I appreciate that.
To your success.
Cheers to that.
Yes.
And to making smart tax moves that support your entrepreneurial dreams.
Absolutely.